So in this video, I'm actually going to answer a BiggerPockets real estate question. I am experimenting with this right now. I am a commercial real estate investor of 18 years, going on 19 years later this year. And I figured that this was a super interesting one. Vacant commercial building. Very scary stuff. In San Bernardino, California. I'm going to share my screen with you to actually show you this question right now, and it is right here. Okay, so this comes in from David Friedman, and we just purchased a mixed-use building with 7 units of retail on the ground floor, an office above 13,000 square feet, and a really cool basement, 8,000 square feet. We bought the building vacant except for one tenant, a nail salon. The property owner let the building decline for many years, but the location is prime next to the California Theater and Regal movie theater. In your experience, what is the best way to attract a restaurant tenant to a property like this? Have you had any success cold calling restaurants in the area who are looking to expand? What methods have worked for you? I feel having a restaurant tenant will help fill out the rest of the property pretty quickly if the food is good. And they have a link to the listing. So excellent question, excellent scenario. I've bought many vacant commercial properties before, and it's always putting the pieces together, right? So like, what does the area actually need? And the way we can find that is by simply doing a map search, right? So, but first things first, what I want to do is I want to take a look at the listing right now. So let me see here. So I'm going to share this tab instead. This is the listing. I was able to look it up on LoopNet CoStar. And I'm actually going to dive into right to CoStar right now. Actually, you know what I'm going to do? I'm going to take this and I'm going to put it into Google Maps. All right, so, and you can educate yourself so much on an area that you do not know or intimately know based upon just doing a Google Map search. All right, so what I'm going to do is I'm going to do San Bernardino, California, and I'm going to take a look at this on a street level view, okay? This is information that anybody has access to. I have a software called CoStar, which I'll dive into the actual functionality of that. I buy a lot of commercial real estate, so it's worth me paying the $400 to $500 a month for that software because I buy a lot of commercial real estate. All right, it gives you a lot of market intelligence. But if you do not have, if you're not in commercial real estate yet or not in a big way like I am, then you can use Google Map Search just fine, just to kind of survey the area. And it looks like we have two really important community assets here, a Regal Theater, all right, and then a Theater of the Performing Arts. So I think that David is on the right track, right? Attracting retail and that buzz and foot traffic definitely has helped me populate buildings that we have. Because if you have vacant retail, that's the first floor, the entire building looks vacant, right? If you get some of those storefronts open, right, then the building looks occupied, even if the second floor where the offices are completely vacant, right? People do not like to look at 100% vacant buildings. It doesn't make them feel good, right? Like, oh, all right, well, I don't want to be like the pioneer over here. So I'm going to take a little Google Man drop over here. And right now, all we're doing is just checking out the very, very close. Oh, look, we got some donuts going on there. That's awesome. So you can definitely tell that probably at night there is not a lot of street activity here if you can see donuts in the middle of a traffic intersection. So just saying. So right here, this is where the storefronts are. The offices are on the second floor. So you can imagine if you got a couple of good retail tenants here that I think would be complementary to the actual Performing Arts Center. I think that, and those thrive, that could definitely help you fill out the rest of the retail. How I approach these vacant buildings is sort of like it doesn't happen overnight. You have to think of things in a long-term way, right? So it may take you 12 to 24 months to repopulate a vacant retail space. Hopefully you bought the building right, so you can actually have so you have a low amount of carrying costs. Hopefully you have a low amount of debt, or you have partners on this building, and we'll talk about that later on in terms of what types of partnership structure to have on vacant commercial buildings. But if you have that in place, then you can be patient. The idea is being patient, right? And the only way you can be patient is if you don't have a gun against your head in terms of high debt service on a property that's 100% vacant, right? Because it's going to cause you to make bad decisions, and it's caused me to make bad decisions as well. So we're looking over here, we got the theater. So I'm seeing right here in my mind's eye, right? You have people that are early to the theater, right? And we're taking a zoom out here. This property actually includes this entire parking lot that's behind here. Huge parking lot, huge value to this property, right? Because you can populate the retail tenants, maybe half of the spaces there with some retail tenants, coffee shop, restaurant, that sort of thing. May cause parking requirements during the day, right? Say with people actually visiting the places during the day or at night. And then you also have substantial amount of parking during the day for your office tenants. So this is a great thing here. And hopefully in San Bernardino it does not snow, so you don't have overnight parking, or late night parking isn't going to be an issue. Okay, so we got plenty of parking here. That's awesome. And if we go down to the street level, let me drop my Google Man there again. So what I'm seeing in my mind's eye here is lean into the actual theaters, okay, that are in this area here. Very, very strong. This can help you place make this project, right? And I like the look of this building. It actually is kind of cool with all the storefront and floor to ceiling glass is awesome, right? What intuition might lead you to believe is, hey, let's place the coffee shop or the restaurant right next to, on the right hand side of the building that's closest to the theater and all that sort of thing, right? I would not do that, right? I would focus actually on this corner right here. The corner is going to be the most advantageous spot for the actual retail tenant that you're looking to attract for the building. And also, if you're looking to actually have a restaurant, I don't know if this building has had a restaurant tenant in the past, but typically restaurants that put out a lot of product need gas, okay, gas to cook, and they'll need a hood and ansel system. So the best way to have a hood and ansel system is you got this entire wall right here, okay? So they can route out that, and a hood and ansel system is basically, you see those big stainless steel hoods. Any restaurant that uses gas to cook, which are most of them, need a hood and ansel system. An ansel system is actually will put out fires if there's a grease fire, and is usually required for most restaurants due to local code and also state code. All right, so a lot easier to route that out. This restaurant is going to want to be on this corner here. And also, what I would do is, because this is a vacant building, you want to rebrand this building. And the best way to rebrand it is with a mural, public art, getting a vibe into the area. All right, because I did research on this area, and it is in a weird kind of street, and I'm going to show you in my CoStar research in terms of traffic patterns and that sort of thing. And so you're going to learn why. So I've done this before. I added a mural. I'm actually going to show you one that I did on another project. It was a very difficult project, actually in Rochester, New York. So I'm going to share this tab with you. I'm going to show you what I did. 441 Monroe Avenue. I'm going to just show you an example, right? So I'm going to drop my Google Man down right here. Boom. Okay, cool. So this is my building right here. The building was actually fire engine red. I had this mural put in here by a local artist that actually had done a lot of murals along this street to kind of keep continuity in maintaining that vibe with this area, which is, it's still a little bit of a challenging area, but we wanted to rebrand the building, right? Your artsy types, your kind of like ground floor restaurant types of people that are like owner operators, are actually working in the business. They're more motivated by coming into an area and creating impact, right? You're not going to attract like Tim Hortons or Starbucks or national retailers to this area. You're going to have to, recruit those types of operators that they're not in it for the money. They're in it for contributing to the culinary arts scene. They're in it for the feeling like they're making a difference rather than, making a ton of money, right? So that's what I would do in terms of like first things first. You already own the building. We're not going to talk about capital stack right now, but I will go into how I would structure this deal. A deal like this, it's vacant. Okay. So now what we're going to do is we're going to go into some CoStar analytics. All right. So this is the property right here. All right. This is the property right here, and right around here we're going to get a sense of traffic patterns. Now, if you look at this closer, this area isn't even trafficked enough to actually have had a traffic study even commissioned. Okay, so I'm going down 4th Street, and you can see how 4th Street just it ends at Arrowhead Avenue. All right, this is definitely not a sort of like a walkabout type of area. This is kind of more like a off Main Street sort of retail. So let me see here. So yeah, so there's not really a lot of traffic to consider here. You don't see any national retailers along 4th Street, so that's definitely not, once you start seeing clusters of national retailers like Starbucks, love to see Starbucks. Okay, what's this one right here? Del Taco, okay? Love to see these types of In-N-Out Burger, right? Classic. So, and you're going to see a huge cluster over here. So this is probably a very, very high traffic area. A lot of these national retailers, they're like sheep. They like to follow each other. These real estate managers, they work for these large corporations. Their job hinges upon them being able to locate and source banger locations for their new stores they open up. So they love to see that there's a critical mass of national retailers. On 4th Street, not seeing that. So I'm not going to bank on that. But I still think you have tremendous amount of opportunity to kind of create this side street here. Hopefully you bought the building right. The reason why I asked this question is if you bought it right, you can cut deals with tenants. All right, you can cut below market rents with tenants. I do have access to CoStar in terms of what market rents are in the area for retail and also office. We're not going to get in that today, but that's the one thing you want to figure out is what are the average office rents per square foot? What's the occupancy rate? What are the average retail price per square foot? And what are those rates? And when you buy something right, like we have in the past, then we can like cut super aggressive lease deals with tenants to get them in quick, high quality operators that already have a great track record, great following in terms of opening up a new concept. In terms of recruiting, I would do that Mural first and then just stop in to these a lot of these like hipster type of places that need to like hipster coffee shops and hipster restaurants that are these sort of like Epicurean like experiences and that sort of thing. Stop in there and talk to the owners off hours, okay? Hopefully when they're not busy and that sort of thing, and just ask them, hey, I got a new project over in San Bernardino. I'm looking to program it and create a vibe over there. Are you at all open just to walking through some space with me? I know you're probably not, it's a shot in the dark and you're not looking to open up a second location, but will you just willing to just give me your thoughts and how I could create an attraction for a potential retail restaurant tenant, okay? And then just have them over, right? Have them walk through the building. I've been able to, now it takes a lot of repetitions on this, but I've leased up spaces and really, really been able to move the needle with reprogramming retail. When you reprogram retail, it kind of changes the complexion of the whole property. So now you have on the second floor office space is tough to lease right now. So you have to stand out above the competition. Sometimes it's not even about offering a killer lease deal, which you may have to still offer a killer lease deal with a commercial tenant. But if you can program just a little bit of that retail spot there, so people can say, I can locate my company here, get below market rents from the other competition, keep my overhead down, have parking, and have a couple of killer places where I can my employees can go for lunch, or we can bring clients, or we can go out and go to a show after work, like go to the actual the local theater or the Regal Cinema Plaza and that sort of thing. That's really how you create that demand with your product. So that's basically how I would do this whole thing. Additionally, capital stack, right? When you're buying a vacant commercial building, which we have in the past, you want to be able to negotiate financing. You probably could not finance this thing with a bank. You probably have to find private money to finance a vacant building, especially if it has a 50% office component to it. So the best thing to do is if you're getting private lenders or you are taking on debt, but the payments aren't due until you pay them back. I've raised capital from self-directed IRA holders where I've raised, let's say, $300,000 or $400,000 in capital or $1 million in capital, and I offer them as listen, I will pay you 10% per year, personally guaranteed by myself and my partner, but the payments for that are going to accrue. And then we will pay you back your principal plus your interest when we either refinance the property or sell it. And so this is where you don't have a gun against your head. Now you still have the time ticking, and a slight gun against your head with your carrying costs, and plus you got to understand that interest is actually accruing and can work against you in terms of eating into your equity at the back end. So you do not want to sleep on that. But this is the way I can get a property like this. Get it let's say the retail 50% leased up, and also maybe a few office tenants leases signed. And if you have an attractive enough basis, if you bought the property right, you can get this thing maybe up to 50% occupied, bring it to a bank, and be able to take out your private lenders on the deal, right? Assuming that you're going to be breaking even at that point. So that's how I would structure that deal, or just straight up just equity. If you're raising the capital from investment partners, hey, this is the split. You get 70%, we get 30%, we do 50-50, whatever you work out with there. Equity is probably going to be the less stressful of those two, but sometimes you're like, hey, if I'm going to be doing the sweat equity on this deal and I want to reap the rewards and the upside, then that's why I do debt deals all the time with self-directed IRA holders. It's worked really well in the past because, I have given up equity before, but I don't like to. And if you don't have to, you shouldn't. So hope this helps. If you do like these sort of like case studies in terms of answers to BiggerPockets questions on commercial properties and commercial multifamily, definitely drop some comments below. Let me know what you want to hear about. And also, if you're interested in learning more about case studies that I've actually done, watch the next video. It's actually about a commercial mixed-use property. It was my first mixed-use property I bought back in 2017. And that deal alone netted me $348,000 into my net worth and pays me about $20,000 a year in cash flow. That was my first commercial deal, right? Like commercial in terms of it had like retail storefronts. So definitely tune into that one, and I'll catch you soon.